What's up, people? Welcome back to Invest with T Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. This week was an interesting one, wasn't it? The Consumer Price Index, or CPI, which is a measure of how inflation impacts us as consumers, came in at a new 40-year high. 9.1% to be exact versus the 8.6% the previous month. Economists and financial strategists are now calling for a 100 basis points or 1% increase on the Fed funds rate by the Fed here at the end of the month. Which, by the way, you would need to go back pre-1990s, right, to see anything close to that. So it would be a big deal. But yet, we've somehow made back most of the losses from the hot CPI print number. Better yet, Virgin Galactic, a growth stock, a non-revenue generating company, which in this environment of rising interest rates and high inflation should be getting crushed, went against the trend. It's up 1.67% this week and up 25.86% over the past month, which begs the question, what is going on? That will be the focus of today's video. Virgin Galactic dropped some big news that we need to go over. We'll check on where analyst sentiment is currently, and I'll close with my personal takeaway on whether or not Virgin Galactic is still a good deal after this run up. The answer might surprise you. As always, this isn't to be taken as financial advice. I am not a financial advisor. This is my personal approach to investing and the thought process behind it. I do recommend watching all the way through so that you don't miss out on any pertinent information I'll be sharing. Drop this video an early like if you haven't already, and hit that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. So first, let's talk about why Virgin Galactic is back on the rise. Q2 earnings season is now underway. Virgin Galactic formally announced at the end of June that they would hold their Q2 earning call on August 4th after market close. The call is scheduled to start at 5 p.m. Eastern Time, and it's not uncommon for stocks to rally all the way up to their earning call, and so one could attribute the start of this uptrend to the fact that we now have a target for traders to set their trades around. But besides the upcoming earning call, Virgin Galactic has officially revealed the name of a major partner as they look to start scaling the business. During the Q1 earnings call, if you remember, they had announced that they were planning to outsource some, if not most, of the subassembly manufacturing and would primarily focus on design, engineering, and final assembly in order to cut costs and gain efficiencies. Now, the first major news, right, is as of July 6th, Virgin Galactic announced that they will be working with Boeing subsidiary Aura Flight Science to build 2 additional carrier aircraft to support their upcoming spacecraft fleet. Looking at the press release, here's what Virgin Galactic CEO Michael Colglazier had to say. Our next generation motherships are integral to scaling our operations. They will be faster to produce, easier to maintain, and will allow us to fly substantially more missions each year. Supported by the scale and strength of Boeing, Aurora is the ideal manufacturing partner for us as we build our fleet to support 400 flights per year at Spaceport America. End of quote. And so the first new generation mothership is expected to enter service in 2025, the same year Virgin Galactic first Delta-class spaceships is expected to begin revenue payload flights. And yes, I realize that the impact probably won't be felt for another 2 to 3 years, but here's why it matters. With the current ticket price point of at least $400,000 per passenger and 6 seats per spacecraft, the projected yearly revenue would be at least $960 million per year. Let's just call it $1 billion, right? The current market cap of Virgin Galactic is $1.9 billion. So from a valuation standpoint, given future projected revenue, we're currently at a very, very attractive entry point for the stock price. But that's not all. The second major news that dropped this week on July 14th, they also announced that they signed a formal long-term lease on the location of their final assembly factory for the Delta-class spaceships, which will be capable of and are critical to achieving the 400 flight a year run rate. The facility will be located in Mesa, Arizona, and will have a production capacity of 6 spaceships per year. In the press release statement, their CEO stated, and I quote, "Our spaceship final assembly factory is key to accelerating the production of our Delta fleet, enabling a rapid increase in flight capacity that will drive our revenue growth." End of quote. Now, the big deal here is that the facility is actually already under construction and will be fully operational in late 2023. That's not too far away. Some of my quick thoughts here. Commercial revenue flights are set to commence in Q1 2023 with the current generation carrier plane VMS Eve and spaceship Unity. Even though these latest announcements won't have a material impact in the next 3 to 6 months, they are still major announcements that show that Virgin Galactic is investing and positioning itself for success. And so the recent uptrend in my mind is a reflection of the positive sentiment investors are feeling on the back of all this. I expect we'll hear more about these key steps in the roadmap and get a bit more details on the upcoming starts of commercial flight here on the Q2 earning call. And so when you put it all together, it's a fair amount of good news in a relatively short amount of time, and that keeps us investors optimistic. But is it enough to shift the consensus view of the analysts covering the stock? As it stands, Virgin Galactic overall rating is hold. The breakdown is as follows with 2 buy, 2 hold, and 3 sell ratings. The average price target is $8.79 with a high-end forecast of $20 and a low-end forecast of $4. At the current market price of $7.35, you're looking at a 19.59% upside to reach the median consensus stock price. And so ultimately, what do I make of all this? Do you buy, hold, or sell? Personally, in my humble opinion, if you're looking to trade the stock in the near term, meaning your time horizon is a quick flip before or by the earning call, I would not enter here. The reason? Well, we maybe have one more week of market staying fairly leveled before high volatility and possible downtrend returns. The main reason being the outcome of the FOMC meeting from a rate hike perspective in the last week of the month, as well as the formal call on whether or not we are entering a recession on July 28th. You'll have a better opportunity to buy the stock at a lower price as we get closer to that date. Even if you wanted to take it a step further, right? And let's say that your time horizon was like me, a year plus. I would still recommend simply holding here at these levels. No matter how you slice it, Virgin Galactic has been trading far below its 200-day moving average of $11.51 for quite some time. Therefore, really what I would be looking at is the 50-day moving average price of $6.57, which has proven to be the trend line that you want to be paying attention to. We will most likely revisit that level. That's the price point where I would add more if you're looking to accumulate and get the best deal. And so here's the last thing I will say. Regardless of whether we slip into a recession at the end of the month or not, I happen to be in the camp that believes that 1, we aren't going to go to recession, and 2, the Fed won't raise by 100 basis points this go around. But then again, I've been wrong before, so we'll see, right? In the end, I maintain that Virgin Galactic has more than likely already bottomed. Valuation is pretty attractive, and you're looking at some major upside over the next few years. So long as, of course, they get commercial flight going. So I will personally continue to accumulate, but will be mindful of the key technical levels I mentioned earlier, so the 50-day moving average and the 200-day moving average, so that I get the best possible price while I continue to DCA and grow my position. But that's where I'll leave it here for today. Don't forget to drop this video a like if it provided you some new insight and helped you gain a new perspective. Share with others who you think could also benefit from it. For my newcomers, subscribe and don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday for my weekly video. Till then, you can keep up with me on Twitter. Thank you for watching. Stay humble, hustle hard, and I'll see you in the next one.